Yo, I'm Brendan. At least a dozen investing apps all claim to be fantastic for someone who's starting their stock market journey. But the reality is, it's very, very hard to find a truly great investing app for beginners. At first glance and at first features, there's tons of investing services that all look really good and have pretty comparable features with each other. But sometimes people just pick an app and get started, and that's a mistake. Each investing service we're going to talk about today, we put through a series of 6 steps just to make sure that they live up to all the qualifications that an investing app for a beginner should really do. Here's the framework that they all have to live up to. Number 1, make us profits, grow our money by investing it wisely. Number 2, make it easy, simple, clear to use. Number 3, it's got to give us fractional shares so that we can invest as little and as often as we want to. Number 4, it's got to give us multiple account types so that we can plan out our lives easily and avoid taxes. Number 5, it's got to give us automatic transfers so that we don't have to remember to invest or be disciplined about it. It's just an automatic thing. Number 6, it's got to give us high yield cash management. And that means that even the cash that we have that's uninvested, that's not put in the stock market to do anything in particular, still gives us a good return, which maximizes our profits. Every one of these 6 steps has got to be maintained by each of these apps, or else it's out of the running for the best investing app for beginners. If you have already gotten started investing with a particular service and you find out by watching this video that it's not really great for beginners, that's totally fine. You have time to make a switch. It's not a huge deal. You can make a move into a better one, and that'll set you up for more success in the future. Just so you know where I'm coming from, I've been investing for over a decade now, and I became a millionaire officially this year at 36 years old, and I've used over a dozen different investing services personally, and I've read over 40 personal finance and investing books that's going to help us to rate these 10 different investing services, starting with Public. In some ways, Public is possibly the most disappointing app of anything we're going to talk about today. It's just always seemed like people would flock to it on paper, but in reality, I don't think that they do. But it does have a lot of positive qualities, like all these things. Number 1, they don't charge the kind of fees that are like sneaky and hidden that these investing companies often charge. For example, like payment for order flow. Instead, they rely on users to opt into tipping the service, which is totally optional. So it means that if you like make a trade, you can opt into giving them a little bit of money to be like, hey, thanks for providing the service for us. Here's a tip. That's really cool because it's both transparency and it's cost savings, which is all for us. That's really great. Number 2, they offer a social interaction platform with other investors who are also using their service, and it's way different than any other investing app I've used or heard of before. Generally, people seem to like social networks, so it seems like people would like this too. Hey, let's chat about investing here. Let's make our moves public. You can see what I invested in. That seems really cool. Maybe it is. Maybe people don't care. Number 3, they've added some really interesting new features this year just to keep things fresh and be competitive with other services. For example, they have treasury bills, which as of this moment offer a 5.4% return on your cash, which is totally fantastic. They also did something super trendy, which is where they added art and collectibles as a whole category of a place to invest in. So it's sort of like the analog version of NFTs, where you can diversify into shares of fine art, sneaker portfolios, Pokemon cards, all these different like hot ticket items. And everything on here that they offer are really popular things that have been known to appreciate in value. And so the idea is that you put your money into these featured assets, then over time they either appreciate or they might kick off dividends like part of the Shrek movie portfolio. That's really fascinating. I mean, who wouldn't want to own a little piece of the Shrek empire? I had to click on that as part of the prep for this video. And I was like, hey, maybe I can get into Shrek right now. But it turns out there's like a waiting period for it. Like it's not quite ready yet, but it's like the real movie. Royalties, Shrek franchise original music. I mean, that's a lot of very trendy music that you could be a part of. Historical dividend yield, it says, has been pretty high, somewhere around 7.5%, 8%, something like that. I mean, that's as good as any dividend stock out there. And the purpose for something like that is just to allow you to not have all of your money tied to the movings of the stock market. So something like this is probably going to move somewhat independently from how the stock market acts. You put all your money in this one basket. Oh no, the stock market goes down. Well, Shrek's still doing well because even if the economy doesn't do that well, people still got to watch the movie and listen to the music, right? So it's a way for them to provide you some really interesting diversity, and you don't have to go out and like go all in on an artwork or something like that on your own. You can buy a little piece of it here. Seems very appealing. Seems that way. But like I alluded to from the start, Public is like the nice guy who seems like he does all the right things to be attractive and dateable, but he gets almost zero attention from the ladies, like me in high school. So how does it stack up on our criteria of 6 things that an investing app for beginners has got to do? Does Public help us to make more profit? Does it grow our money by helping us to invest wisely? It doesn't really do anything too negatively besides distract us with these other kinds of accounts, but it doesn't do anything super positively either. So I'm going to give that kind of a neutral score. It's not great. It's not helping us a lot, but it's not hurting us that badly either. Number 2, is it easy, simple, and clear to use? Yes. It's not hard to find what you want to do if you want to buy or trade or transfer or whatever. Everything is very clearly organized in the app, and so that passes for me. Number 3, does it offer us fractional shares so we can invest as little or as often as we want? Yes, it does. Easy check mark there. Number 4, here's where we reach a problem. Does it give us multiple account types? Unfortunately not. Everything I can see online to look up, does it give us an IRA option, traditional IRA, Roth, SEP IRA, any of these other things? I don't see any option actually available in the app as of today. They claim some of that stuff is coming, and they have rolled out more and more features over time, and so maybe it is coming in the future, but as of this moment, it's not there yet. Number 5, does it give us automatic investing? The only thing I can see that even alludes to that within Public's account offerings is to pay for that through premium. Now, that's a $10 per month service through Public, and it gives you a few other features too, like VIP account management and extra data and insights and things like that too. But as far as a recurring portfolio investment is what they call it, I would expect that to be a baseline feature. So the fact that they don't just give that to everybody for free, kind of silly for me. Technically it's there, but you've got to pay $10 per month for it. Is it really there? It's a barely over into the positive score for me. It's like a 0.01 on the positive side. And does it offer us high yield cash management? I would say sort of. I mean, the treasury bills thing can kind of accomplish that. It's really similar to what I'm looking for here, but I would prefer that every dollar that we don't have invested in a stock or a bond or something like that that's working for us is automatically into this high yield cash management system, which other services do that we're about to talk about. On this one, they mention on their website that they'll do a cash sweep program where it goes into like a program bank and you may earn interest. So to me, if they had something worth really advertising there, they'd be doing it. So this is basically a no for me. Public isn't a terrible option if you want to get started with that. I have an affiliate link in the description that'll help me out a little bit if you get started there. But I think there is going to be a better investing app for beginners coming up soon. Next is Wealthfront. And this is one of the services I haven't talked about a whole ton in the past. I have used it a little bit personally. I have an account with them, but it's not typically been my go-to place. I think maybe it should be though. First of all, I love how automated everything is and how clear everything is on their website. Whenever you look at your options, you've got a cash account, which is a high yield savings. That's like the least risk and the least potential gain. Then you can do an automated bond portfolio, which is a bond ETF, and that gives you a little bit more variability, but maybe a little bit more profit too. Then you can do an automated investing account, and that's index investing, and that probably is a lot more volatility, but a lot more potential to profit. And then if you really want to, they give you the option of a stock investing portfolio where you can pick your own individual stocks and develop that however you want. That's the most variability, that's the most risk, but if you really want to do it, you can do that. And so they just lay all that out so clearly for you. It's so obvious. They've got really competitive rates on these things, like the automated diversified bond portfolio. As of today, the time of recording, the 30-day SEC yield has been 5.88%, which is right up there at the top of what I would expect. The cash account is 5% APY, which is really great. So right off the bat, it's checking so many boxes of something that I want to see whenever I'm looking for an investing app for beginners. As far as the design of the app, I think it's done really slick and it's very clear. It's easy to see where your money is, how much is invested, what it might grow to in the future. They've done a good job laying all that out for you and designing the app really simply. So as far as that first criteria goes, making us profits, this is an affirmative for me because the way that they do this and the way they design their app pushes you to invest your money. But if you don't right now, you're still going to get a good return on your uninvested cash. If you want to be a little bit more risky, you can do the bond thing. Otherwise, you can invest. And then they make it really clear. If you're going to pick your own stocks, you've got to know that it's risky. And the fact that they're doing all of that is pushing us in the right direction to make us the most money possible. But really advising against the risk of doing individual stock picking, especially for a beginner, is going to help us make more money because if you're a little averse to doing that, statistically, you're going to make more profit and in the end, you're going to have more money. So that's a big green light for me on number 1. Future Brendan here coming back to you with more information. It turns out I totally overlooked the fact that Wealthfront has a 0.25% assets under management fee, which is actually a pretty big negative in terms of helping us make money. The problem with that is the more money we invest, the more money they charge us to invest. And so that's something that you just can't recover from. If I've got $100,000 invested with Wealthfront, that means I'm paying $250 a year just to keep the money in there. That means if you had $500,000 invested, you'd be paying $1,250 a year. That's like paying over $100 a month just to use this service. That's way more than any kind of flat fee from somebody like Robinhood or Acorns or some of these others. And so that's actually a pretty big detrimental factor when it comes to picking a service that we can use long term. When the fees are in terms of percentages, that means it's an assets under management fee. That sucks. Number 2, is it easy, simple, and clear to use? Absolutely. Super easy, super clear. The website's clear. The app is clear. They've done a good job there. Number 3, can you do fractional shares? Absolutely. Easy check mark there. Number 4, multiple account types. Ugh, love this. Unlike our friends over at Public, they even have a little sloth graphic to show us about their retirement accounts, their IRA. So they introduce us into this world of different IRAs. You can do a traditional IRA, a Roth IRA, an SEP IRA, a rollover IRA. All these things are laid out really clearly for us, and they're clearly giving us all the different account options we could want. Plus, they give us the option of a 529 college savings plan for your kids. So this is a really great option because you can invest for yourself, you can invest for retirement, you can invest for your kids, all from one platform. As a 15-second reminder, IRA is just individual retirement account. And so it's got special tax advantages for you if you want to save for retirement versus if you want to use that money earlier than traditional retirement age, which is basically in your mid-60s. If you want it before then, you probably don't want to use an IRA. If you're saving for retirement, that's the best possible place for it. So the fact that they give us that maximizes our profits, which is a big deal. The fifth quality we're looking for is automatic transfers, and they do this in spades. They've got automatic all over all their features. They want this to be easy for you, automated, set it and forget it, and that's exactly what we want as beginners or as anybody to invest consistently over time. And number 6, do they offer high yield cash management? Absolutely, they do. I have no qualms with Wealthfront as of right now. Is there something coming in the future that might qualm me? Probably. Is there something that I could have missed on here that's a big negative? Possibly. As of right now, Wealthfront is a fantastic app for beginners to get started with. I'll link their website in the description. I don't have any affiliate kind of link to go along with them that I know of. And so if you start investing with them, it purely helps you. I've got nothing to gain here. I just think that you need to invest with a service that makes you the most money. Speaking of that, next we have our reigning champion of best investing apps for beginners, Acorns. Oh, Acorns. Acorns, Acorns, Acorns. I've been thinking about making this video for the entire year. And up until November of 2023, Acorns was in really hot water. They were definitely not scoring high on my 6 qualifications, particularly in the multiple account types area and in the high yield cash savings area. They were failing stupendously, but I think that they started fearing that I might give them a terrible rating or this poop trophy. So they quickly redesigned their offerings to rank higher and avoid the poop trophy. Acorns has been something like a repeat superstar of the best investing app for beginners series that I've made because they just make it so easy. They make it so simple for you to maximize your profits and to get started. So much of the personal finance world is confusing and it's really easy to get lost in all of the numbers and the charts and everything else. And Acorns just takes all of that guesswork out of it. One of the most difficult things about life is just getting started at something new. And Acorns makes that transition from not investing to investing probably the easiest or the second easiest out of any of the apps we're going to talk about today. And that alone is such a huge factor. You can't be successful unless you start. Besides charging us money to be able to use their service at all, Acorns was pretty good at helping us make profits. Nowadays, you've got to choose between 3 different plans to access Acorns at all. There's no free option for you. The cheapest plan is $3 a month. The next plan up is $5 per month, and the nicest plan is $9 per month. And each of those unlocks a little bit of an extra feature. So like if all you wanted to do is invest and use some of their banking features, you could go ahead and do the personal plan. $3 a month, you're in and out, it's easy. To be able to get their newest, hottest offerings, which is Mighty Oak Banking, which is a nice debit card and also a really nice high yield savings account, you've got to pay at least $5 per month, if not $9 per month. Now, if you want to go all in and pay $9 per month, which is basically $100 per year, you get all those other features, plus you get a little bit of extra stuff, like you get this banking for your kids set up. It's this whole different service that Acorns just absorbed. It's called Go Henry, and it's basically like a really in-depth debit card setup for your kids to use. You can track more stuff of what they do. They get to learn some things with this like online curriculum. My kids are technically too young to even be able to use the service, so I can't really test that out super fully yet. But in theory, that's a really great feature, and I've made videos about that if you want to look back through my older videos and find them. Also, the last 2 benefits you get from this $9 tier, this premium tier, is $10,000 in life insurance, which is nice in case you die, and then also a no-cost will to help you plan for your family's future. So what they've done is like layer on more and more of all the financial things that we should be preparing, we should be aware of, we should be optimizing, all that kind of stuff. If you want to unlock it all, you're basically paying $100 a year. So that's a bummer. That's not helping us make more money. But Acorns does help us to make profits because they encourage everybody to invest through their ETFs. And they have you take a little assessment to say, like, how risky are you? How okay with the potential of your account going up and down in value are you? Because if you're not okay with that, we'll invest in this way for you. And they just tailor all that for you. So you're not picking anything yourself. They just put it all together and make it really easy. Then they say, well, if you're a lot more risky and you're okay with your account value going up and down and you're really wanting to make more money, we'll invest for you this way. And they give you the kinds of ETFs that would do that for you. ETFs is just a way to say a big lump of different things you can invest in all together in one basket. Instead of having one piece of fruit, it's a fruit salad of investments, that kind of thing. They will let you pick individual stocks if you really want, but you've got to pick from a select few, so you can't do anything really that risky with Acorns. Like nothing you're going to do with them is going to make your account value go to zero. So in that way, they do help us profit. I'd say overall, that is in the green. It's not a huge green for me, but it's still a positive. Number 2 is Acorns, easy, simple, and clear to use. Absolutely. There's almost nothing easier to use than Acorns. If Acorns was a tool, it would be a hammer. It's about the most basic thing you could possibly use. So it gets the green light on number 2 for me. Number 3, does it offer fractional shares? Absolutely. We can invest as little money as we want, $5, $10 a month, something like that, and they'll let us invest in it. The problem with this, if you're not familiar with that term of fractional shares, is if you don't have fractional shares allowed on your platform, you've got to buy whole stocks. So sometimes a stock is like $200 or $500 just to buy like one chunk of this company. That's what a stock really is. And if you have to wait to save up $200 or $500 to buy a chunk of a company, where you're missing out on all this investing in between now and then. And so the fact that most, if not all of these services we're talking about today offer fractional shares, it's a mandatory thing. This is a baseline feature. If your investing service doesn't have this, get out of there. That's silly. So Acorns gets the green light on fractional shares. They definitely also get the green light on multiple account types. Of course, their marketing department works overtime at Acorns, and they've got to have cutesy little names for all this stuff. So you can have an invest account, which is basically a taxable brokerage. You can have a later account, which is an IRA, like we talked about before, really good for retirement. You can have an early account, which is an investing account for kids, where you and the kids both are like joint owners in the account technically. And that means that as the kid's a minor, you advise them, you control the account, but then whenever they get to be an adult, then they get full control of the account. So it's a very good thing to like protect them legally. It's a very safe thing for them to do, and it's a way for you to invest for them now without there being like a defined outcome, like saying, I want to invest for college with a 529 savings plan. I just want to invest for them in general. They give you that option for your kids too. So it's a big thumbs up there. Also, the automatic transfers with Acorns is super easy. They really encourage you to do this. They even kind of gamify it, setting up little like milestones. So they say, hey, you've earned some points for setting up a recurring deposit. That's what their term is for it. And because they really encourage us to do that, it's a good thing for us. It makes it easy for us to invest more and more over time and just make that a habit. And so that's a big positive thing. And number 6, this high yield cash management deal. Tell you what, I was about to flunk Acorns out of this contest until they added this feature just this year. Partnered with Dwayne Johnson, The Rock, and they said, hey, let's set up this new kind of banking account for Acorns users that gives them a debit card that's got some nice features. It gives them 3% return on their cash that's just sitting there doing nothing, which is really high for a checking account. And let's give them the savings account that gives them 5% interest on the cash that's sitting in there. They call that emergency fund, even though it doesn't have to be for an emergency fund. It can be general savings for whatever you want. The fact is they're calling it that just because it's typically wise for us in our financial umbrella of a foundation that we need to have. An emergency fund is one of those things that's recommended by basically all the experts that we should all have, just so that if the poop hits the fan, you've got this cash ready to go. And so they didn't have anything really designated as that before. They didn't even have a savings account before. And so now they've got that box checked for me. And so that's a big green light on the high yield cash management. Overall, Acorns is a good investing app for beginners. The main problem with them is just the fact that you've got to pay that monthly fee. A lot of people just hate it. They hate that you can't just get in there and start investing and use these features like you can with somebody like Wealthfront or Robinhood or whoever else that doesn't charge a fee to even access it. And it feels basically the same. Once you're in there, it feels the same. I'll put it this way, if Acorns didn't have a monthly fee that you had to pay, it would be the winner pretty clearly for me. It's still very easy to use. It checks all the boxes. It's great. But the fact that they make you pay a monthly fee, it's fairly disappointing. I'd say it's by far the app that's most tailored for beginners in particular, though. And if you want to get started with Acorns, I do have an affiliate link in the description so you can get started with them. I think you get $5 for getting started today, and that also gives me a little kickback. So I appreciate that. Now on to the next app, Betterment. Betterment's one of these services that's been around for a while. It's never really been like the face of investing for people. It's not been super popular, but they do have some really great features that's worth talking about today. So let's jump into that now. I first found Betterment when the whole craze of this automated investing in terms of a robo-advisor came out a number of years ago now. What was that, 5-6 years ago? They basically said, look, we've got these algorithms that are programmed to invest for you. So you say the general vibe of what you want to be investing in, and we let the computer do the rest, because ultimately computers in this kind of instance are smarter than people. They're not going to lose their cool. They're not going to get emotional. It's going to program your investments the way you want it to, set it and forget it, and it's this ongoing optimization. They're big on promoting the optimization of this and saying that over time, a few percent here and there is going to really like increase your gains. Do I have like empirical data to fact check that? No. But I think if you like that kind of idea, if you like the concept of having a computer do that for you and having it look for things like tax loss harvesting and constantly monitoring and adjusting your investments for you so that you feel like everything is really set up well, that's the most important thing here, because ultimately we're not computers. We're not set up to do everything robotic. We're not the Terminator. So we've got to stay engaged in our investing here. We've got to feel like we're doing the right thing, which is going to promote us to invest more, because ultimately what makes us the best investors are three things. Number one, we get started and we invest as much as we humanly can. Number two, what we're investing in is really well diversified. So we're not picking a couple stocks here and there and betting the moon on them. We're diversified over a number of different investments, a bunch of different companies, probably all over the world, maybe hundreds or even thousands of companies. And that means that if a few of them go out of business, we're fine, because we still have 986 left that are in business and profitable. So we've got to be diverse. Number three, we do that for a very long time period. We're not going to get rich quick here. We're going to get rich slow and safe and secure. So if it helps us do all those three things, whatever the app is, if it ties that into you, I think that's going to really work out well for you in the long term. I think there's people who are probably die-hard Betterment fans because of the way that they do things, and that's great. If it helps them, that's wonderful. And there are a lot of good things that should help you here. They do similar things to like what Acorns does and other services do, where you initially go in there and you talk about who you are, what you want to accomplish, what's the point for you to be investing. Are you building wealth to buy a Porsche 911 someday? Are you saving up for retirement? What are you going to do with this? Then you can choose how you want to invest. So you can pick one of their portfolios, and it's built up by their experts and kind of managed by their robots to say, hey, here's a bunch of low-cost exchange-traded funds, which are ETFs. So that way you're diversified. You're not paying a bunch of money in fees. You're not paying other humans to do this trading for you. It's all very efficient. If you like efficiency, Betterment's probably really great for you. And then they automate a bunch of stuff for you. So automated trading, automated rebalancing, dividend reinvestment, all that stuff is done for you. And so you're not having to go in there and maintain this. A lot of the game with investing and a lot of what doesn't drag down your account returns is keeping people out of it. You've got to keep the advisors out of it because they charge a big fee. You've got to sometimes keep yourself out of it because your emotions can get in the way. This way, it's a real set it and forget it kind of vibe with Betterment, and that's what we want to make the most money. They offer a bunch of different forms of investing, and so that really helps us out because you can get started with something like a standard taxable brokerage account, which almost everyone starts with. Then if you want to, you can move into an IRA and get saving for retirement. Then if you want to specialize with socially responsible investing that picks companies that are good at that kind of thing, you can do that. You can dip your toe into the shark-infested waters of crypto if you really feel like it. They give us all the options there. And speaking of options, they've got good cash management options. They've got a high-yield savings account. They've got a checking account. They've got rewards tied to the debit card you can use with them. You see the trend here. They're really trying to cover basically all of the things that you need to be able to manage your money well, and they're doing that here in, I think, a pretty good way. They even give you a little bit more information than the standard investing service. They kind of merge the worlds of tracking all of your money long-term and investing some of your money now. And they put those worlds together because they give you this all-in-one financial dashboard that I think is really cool. I'm also a huge nerd, so if you're a nerd like me, you probably like this. Nerds unite. They call it this all-in-one dashboard because the point is to connect all of your outside accounts that are financial accounts and put it in one place. And so because all of that stuff is linked, you can see where your money is moving. You can track how much money you're saving really easily. You can combine any joint accounts you have with somebody else in there, as long as it's truly your account too. You can see your performance over time. And so it's easy to see all of that stuff in one spot instead of having to log into a bunch of different services. And the big, fat, awesome thing that I love is you can see your net worth. Your net worth is this simple one number that tells you how well you're doing with money. And I think more of us should pay attention to it. All it's saying is, here's all the money that you have saved and invested. So like your checking account, your savings account, all your investment accounts, all that combined into one big positive number. And then over here, you've got all of your debt. So the mortgage, your car payments, student loans, all that other stuff, that's a negative number. That's money you owe. You take the positive number, subtract the negative number, that's your net worth. For those of you who have a very simple financial life, you could do that like in your head right now in 3 seconds and know what your net worth is. But once you get a little bit older, you're an adult, you've got things that are fluctuating in value, like your investment accounts or your home value, you're paying off debt constantly, so that number's getting smaller. This is something that fluctuates over time. And if you're making really good decisions, your net worth should be trajectorying. Is trajectorying a word? And if you're doing a really good job, your net worth should be going up over time on an upward trajectory because you're paying off debt, you're investing and saving more and more money. And so this way you can visualize that and see it going up over time. If you're hit some hard times or you're not making that good of decisions, one or the other, sometimes both, then you can see that your net worth is going down over time. And you go, hey, hold on. We've got to put the brakes on. We've got to make some changes. So that's a pretty awesome value add that Betterment gives us that almost no other investing apps we're going to talk about today give us. How does Betterment stack up on our 6 criteria? Number 1, does it help us make profits? Does it grow our money by helping us invest wisely? In general, I'd say yes. They're not really pushing us into the best possible investments, but they're there for us. They're going to encourage us to invest with ETFs and not push us into individual stocks. So that's the general first misstep that everyone does, is just be like, I'm just going to pick a few individual stocks that I really like. They're not going to let us do that. So I'd say overall, they're going to help us be profitable, but there's a fee to using Betterment. Let's talk about that now, because paying anybody any money doesn't help us be profitable. Keep in mind, Betterment has a lot of great features, so what you're paying for here is to unlock all of those features. It's not a bunch of multiple tiers like Acorns, which is annoying. It's just one fee here. So to get into their investing service, their expert-built stock and bond portfolios to help you build wealth, initially I thought the pricing at Betterment was really, really fair. I found out by reading a little bit more of the fine print, it's more annoying than that. So what you first see whenever you look at their website is that the pricing is $4 per month, which is not terrible, or a 0.25% fee. And so I thought that was an option that you could pick for yourself. Different people are going to pick different things for different reasons, but I thought you had that option. And then crypto is a 1% fee, cash reserve is no fee, and checking is no fee. So that all seems pretty fair. But then whenever you scroll down, you realize that you don't have a choice of what you're paying for those fees. You have to switch over to the 0.25% annually once you get enough money in their accounts. And that's a total not just of their investing accounts, it's a total of even their cash accounts, their crypto, their checking accounts, all that different stuff. You've got to total all that up. Once you hit 20 grand, you've got to switch over to that 0.25% of your investing account balance. So if I lost you in all those numbers, all this means is the Betterment is making sure that they're making adequate money. This is not a benefit to us. This is not helping us in any way. This is them saying, okay, if you've got less than 20 grand deposited with us, we're going to make the most money by charging you $4 a month. After that, we're going to make sure that we're charging you more than $4 a month because we're going to charge you this percentage. So like at $24,000 deposited, they're going to charge you this percentage. So that's $5 a month. If you get up to $40,000 deposited, that's basically $8 a month, and up and up and up. So I've never been a big fan of a fee structure based on percentage of assets under management. I think that's like the least attractive way for us to invest because it costs us the most money. They're making the most money doing it this way. We are spending the most money to pay an asset under management fee like this. Is this going to absolutely make or break our investing life? Is this going to take away all of our gains and make sure that we never make any money? No. I don't want to overblow this. I don't want to say that this is a bigger problem than it really is, but it's a pretty nasty thing to have to pay more and more money. This is disincentivizing me to invest more money with them because the more I invest, the more it costs me. The beauty of a flat fee with something like Acorns is, let's say I'm paying $9 a month to invest with them. Whether I have $1,000 in there or $100 million in there, I'm only ever going to pay $9 a month. And so really what that is it's an incentive to invest more because the more I invest, the cheaper it gets. Your fee is basically going down, where on this, they're making sure that they get as much money as they can. So I don't love that. Man, does that undo all the positives of the investing? Do I give them the green light on this first criteria of does it make us profits? Does it help us grow our money? I'm going to say that breaks even. By the time you count the negative impact of that emotional toll, knowing you're paying more and more in fees, and the fact that it is an actual dollar amount that you're paying is equal to what it means for us to be able to benefit from their recommendations of using an ETF and all the optimization and all that stuff. Is it literally the same dollar for dollar? No, but I think by the time you work in the emotional side of it, maybe you just don't feel like investing as much because they're taking so much darn money. Number 2, is it easy, simple, and clear to use? I'd say mostly. I don't think it's so complicated that anybody's going to get lost in it, so I'm going to give that a green light. I'm going to say yes. Number 3, does it allow fractional shares? Yes. Number 4, multiple account types? Yes, absolutely. Number 5, automatic transfers. It definitely does, and that's one of the ways that it's going to trigger this higher fee too, is it says if you set up a recurring monthly deposit of $250 or more, then you get thrown into this 0.25% annual fee. So that's really annoying too. Guys, you're disincentivizing me. Why are you doing this? They should charge a bigger fee if you're not doing an automatic contribution. And then number 6, does it offer high yield cash management? Yes, it does. So the verdict on Betterment is they're not quite deserving of the poop trophy, but they're getting close. Guys, you got your incentives kind of backwards here. You're not helping me want to invest more and more. If you really are like an efficiency nut and you love what they're doing, by all means, go for it. But I'm not dying to invest with them. And I'm not going to recommend anybody really invest with them because of the way they have those structures set up. And frankly, the bigger reason besides the annoying pricing is just that it's not the easiest thing for a new beginner to use. There are easier, more straightforward options out there that don't have an annoying fee structure like that disincentivizes you. So they're in the running for the poop trophy. Sorry. Next is Vanguard. Oh, old reliable Vanguard. Vanguard is probably the single longest running investing service that I've personally been using. And so I've watched them change over time and grow and mature into a product that people are more likely to use. Initially, they were so not beginner friendly at all. Just the experience of going through, setting up an account, trying to actually use their app, which was terrible, or even use their website, which was also pretty darn terrible. It was really confusing. Whatever amount they spent on web developer fees, it was the minimal that you could spend and have a functional product. But it's gotten a lot better. You can see that it's a lot cleaner. It's simpler to use. They do let you do some basic stuff on here. It doesn't have the same power and potential that their website does. But as far as an easy, fairly minimal thing that you could use as a beginner, the option is there for us. Also, it's fun that the first thing they point out is your performance returns. Total of $35,000 and change that I've made investing with Vanguard. And so I personally like seeing that up front. That's a little emotional boost. I'm counting that into my factor of what the best investing app is. As far as an overall well-rounded product offering that gives us a bunch of different options in terms of how we want to manage our money and where we put it specifically, Vanguard probably has everyone else in this contest beat. So if you want one service that you're going to start investing with and probably invest with for your entire life and never worry about changing, Vanguard is the rock, the foundation of your financial life that you could invest with, and you probably will never have a reason to change because if you decide later on you want to add something, they probably have it. They're not really trendy, they're not really playing those games, but as a long-term strategy, they're a good partner for you. And the reason for that is just the breadth of their offerings. If we look at this right now, they've got so many different investing products, and a lot of the things that you can invest in just in life, in the world, are Vanguard products themselves. So what I mean by that is that Vanguard has themselves compiled together groups of different stocks and different investments and said, hey, here's a package deal for you. Here's another one of these fruit salads that tailors your life and your goals together. And so they're that big that they have made their own investment groups, if that makes sense. I'm calling it an investment group. Really, it's like an ETF or it's a mutual fund or things like that. But a lot of us aren't familiar with those terms. So I'm going to go ahead with this fruit salad analogy and keep doing it until you guys are sick of it. And the people at Vanguard basically invented the index fund back in the day. Jack Bogle, these guys, if you want to get really nerdy into the history of investing and how all this worked, Vanguard came along and just created tons of waves in the investing world because the way that you used to invest was you would pay out the nose, tons and tons of fees. These guys that were the investment managers were just making crazy amounts of money off of regular people like me and you because their fees were so darn high. And this service came in and finally changed that. They gave the power back to the people. The people at Vanguard basically said, guys, we don't need to make this much money. We would make enough if we charged a teeny tiny fee. We don't need to charge a 1 or 2% fee, which is huge. Picture a blimp-sized fee. That's how big 1 or 2% is. Vanguard came in and said, here's a party balloon-sized fee. That's enough for us. If we manage billions of dollars, which they do, if not trillions by now, I don't know how much money they manage, crazy amounts of money, we'll still make more than enough money. And in the meantime, this opens the door to more people to be able to invest. It helps more people make more money. It gets people more on our side and trusting us versus you guys over there that are charging crazy fees. It did all this positive stuff for the entire financial industry. And a lot of people had to follow suit then because those regular investors who are going to invest their money anyway could look at Vanguard and go, oh, I'm going to get charged a really tiny fee for their mutual fund over here, 0.07%. Teeny tiny. Or I can go with Joe Schmo Legacy Mutual Fund that was invented in 1970 over here, and they charge me a 1.5% fee. Why am I paying this exorbitant fee over here for the same product that Vanguard's offering over here? Bada bing, bada boom. Vanguard is sort of the investment service of the people. If there was such a thing as a real Robinhood, not the investing service Robinhood, but the guy who helps the average man, the poor people, Vanguard is basically them. Ironic that I thought of that analogy just now sitting here, and I didn't even think about the other investing service, Robinhood, being like Robinhood. Vanguard's more Robinhoody than Robinhood even is. If you look at the Vanguard website, some of the stuff that they're going to be touting is those products that they've invented themselves. So they'll be saying hey, our funds will outperform other people's funds. our funds have lower fees than other people's funds and all that kind of stuff. And that's true, but it doesn't mean you have to invest with them to get access to those funds, because I can invest in a Vanguard fund using Robinhood or Acorns or Betterment or whoever. So it could be a little bit deceiving there. It's not that they're deceiving us. It's just that the average person who doesn't really know the difference might go, oh, well, if they've got a better fund, then I should invest with them. You can access their investment offerings other ways, but there are still other good reasons to invest with Vanguard themselves. Number one, do they help us to make profits? Do they help us to become more profitable over and above what we might do naturally on our own? Well, the primary way that they've done that is just their legacy way of lowering fees. So in a foundational way, yes, they help us do that. Do they help us and kind of coach us along in terms of human psychology within the app to say, hey, I've got this money in a brokerage account. You know what I want to do is invest some more money. What should I invest in? They really don't steer you in any direction. And it's kind of weird for me to be advocating for that kind of thing, because I typically don't want a company to steer us in any direction. But I think in this case, when it comes to investing for beginners, we need to be steered. We need to be steered away from unnecessarily risky and foolish things towards things that are a little bit more secure and less risky. I think the general rule of thumb is like, hey, if you want to put 3 to 10% of your money into something really risky, go for it. But the other 97% of your money should be in well-diversified ETFs and mutual funds and that kind of thing. And in that world, you should keep your fees as low as possible. So I'd say Vanguard gets a green light here for number one. On a technicality, yeah, they technically do help us make more profits, but they're not helping us make those decisions day to day. Number two, is it easy, simple, and clear to use? Oof, this is splitting hairs here too. I think the app is pretty okay. I think the app is easy enough to use, and both their website and their app have gotten a lot better in even the last 2 years. So I'm expecting that to continue to get better in the future, but it's a barely technically yes on this. It's still pretty clunky. Their design could make things a lot simpler and easier to use, so I'm looking forward to that in the future. Number three, fractional shares, they offer that. Number four, multiple account types. They offer all the account types. I mean, there is all of the options here. No one will be lacking for the desire for an account type that they don't have here. There's a ton. I'm sure now someone in the comments will be like, they don't have this account type. That's the one I wanted. Now I don't have it. Okay, let me know what the account type is, John. But otherwise, everyone else will be satisfied with the different account types they offer. Number five, do they offer automatic transfers just so that we don't have to remember it? We don't have to be disciplined. They absolutely do. Future Brendan coming back here with more information for you. A little bit of a correction here, because I thought that you could auto invest in Vanguard, period. Turns out they don't let you do it with ETFs. This is actually kind of a thing that gets under my skin. I really don't like that. They only let you auto invest into mutual funds for some reason and not with ETFs, which is totally counterintuitive to me. I don't know why they do that. So that's an annoying thing that I don't think it's a deal breaker for Vanguard by any means. If everything else about Vanguard you like, I wouldn't stop my consideration of using them just because of that. But it is an annoying thing that I think they should change in the future. And number six, high yield cash management. My dad specifically talks about the money market account that he's got with his investing account with Vanguard, because their interest rate is so competitive. I mean, they're not out there like advertising on billboards across the world to say, hey, your uninvested cash is going to get 4.7% interest, but they're right up there pacing with the best kind of savings accounts. And this is just their uninvested cash money market, like waiting room for your money before you invest it. And yet it's getting a great interest rate. So they're really good about that and giving us high yield cash management so that anything you don't have invested is still making us money. Overall, does Vanguard deserve the poop trophy, or do they deserve the best investing app for beginners reward? I think that they're not in poop trophy territory. They're not a bad service by any means, but they're also not going to win an award for being so great for a beginner. Now, if you're somebody who is a little bit less secure about the idea of investing with these like no-name companies or these newer companies, if you feel more secure knowing that your money is with this legacy group that's been around for a long time, by all means use them. Also, if you're a lot more comfortable with the idea of saying, hey, they can grow with me, or I can grow into them and all the services that they offer, also go with them. Because I've got a couple of IRAs with them, a brokerage account, an account for our kids in there. And I set it up, I think in 2016 or 2015 or something like that. And I've been totally happy with them and their services so far. It's nothing flashy. It's nothing that like interesting and helpful, but I don't really need that at this point because I'm committed to doing this investing thing and I'm going to do it no matter what. So I don't need them to be a big help to me. But I think to win the award for the best investing app for beginners, the app needs to help us. It needs to help us along the way, get us started in the right direction, help us to continue, because developing that habit is the hardest thing. They don't really do that for us, so they're not going to win the award today. Next is Ally Invest. And it's definitely an option for us here. I used to invest with them a lot more, especially whenever they had really good offerings in terms of like their cash management. They had great CDs, really high yield interest on their savings accounts. Like everything with them was super great. It wasn't the easiest to use, but I thought, hey, everything else is good. I'm going to invest with them. Honestly, they haven't really made any changes since then. And that was like 3 or 4 years ago. They just don't come out with new features and new interesting things that get me really excited for a beginner. And so they're going to be a pretty short part of this review because they're another one of these companies that it's not a terrible thing. They're not going to get a poop trophy. I'm not going to hate on them for the services they offer. They've got a lot of options for us in terms of zero commission trading, different account types. It's fairly easy to navigate and use. It's just nothing to write home about. It's like when you go to a restaurant and the food's like a 5 out of 10 and you go, I spent $30 to go get that food. And it was a 5 out of 10 on my delicious score. Not great. Let's go through the list just to be thorough here. Does Ally help us to make profits so they grow our money better than if we just kind of invested foolishly on our own? Not really. I'm going to give them basically a 0 for that, or maybe a -1, because there's no really clear, definitive curbing of our intentions to go towards things that help us to invest better. Is it easy, simple, and clear to use? It's pretty easy. It's pretty clear. I haven't gotten into the service and really used it heavily in the last 3 or 4 years, so I think they're going to keep making that better and better over time. If they're going to keep offering a product, they've got to make it better, but it's nothing to write home about. Do they offer fractional shares? Yes. Do they have multiple account types? Yes. Can you set up automatic transfers with them? Yes. And do they do high yield cash management? As far as I understand, your uninvested cash isn't treated super special there, but I could be wrong. Leave me a comment if I am wrong. Man, none of these things they do with a high level of excellence. I'd say generally skip it. If you use them anyway and you like them, by all means. It's not like it's going to lead you down a terrible path. It's just not super great for beginners. Next is Robinhood. Everybody and their brother is familiar with Robinhood because Robinhood is in the news. They're making waves. They are popular. And a lot of people love to hate Robinhood. For me, even, for a long time now, Robinhood has been the service that I love to hate. But in a strange twist of fate, that narrative has turned around, and I think it's actually one of the contenders here today for the best investing app for beginners. What is happening? Acorns almost got thrown out. Now Robinhood's looking really good. I can't believe I'm saying these words, but I may need to go wash my mouth out with some soap here. Okay, seriously though, Robinhood has added such fantastic products lately with really compelling offers. And the fact of the matter is that this service is so easy to use, it makes it really appealing for beginners. That whole combination. New products, easy to use, very simple. What's not to love? The reason that I used to hate on them personally wasn't for things like payment for order flow and other things that some people hate, even though I don't love that either. I didn't like it because they enabled really quick and easy trades. And the problem with that is it teaches people bad habits. It's saying, hey man, it's so fun to jump into this thing. And they were kind of early adopters into the crypto world and some other stuff that just made it feel more flippant, I think, than the way we should really treat investing. I think we need to treat it with some reverence and some seriousness, because if I remember correctly, part of the flack that Robinhood actually received recently was because they didn't have enough warnings and safety features and things in place to really explain to people the gravity of what it means to invest. And so they've had to add more of those, if I remember correctly. And that's a wise thing. That helps everybody out. That's the way it should be. So let's talk about these new features they've added that make it seriously more compelling for the average person, including a beginner investor. Something that I had never seen before that Robinhood rolled out that I think is so brilliant, I absolutely love this, is that they've added an IRA with a 1% match for anything that you put in up to the annual match. That, an IRA is capped, so you can only put in $6,000 per year or $6,500, whatever it is. It's a changing thing almost every year. It gets bumped up a little bit. But they say whatever you contribute to your IRA, we're going to match 1% of that. And so it's that kind of emotional incentive, that human psychology incentive that I love to say, hey, we want you to invest more. We want you to make as much money as possible and do it here with us. So we're going to match what you invest. And 1% is not a huge number. It's not going to make or break anybody's financial life, but it's a great thing, and it's free money, and that's all with no fee. Or if you pay for Robinhood Gold, you get a 3% match. And so I would say that's huge, because over time, that's basically like your employer matching your 401k contributions. That's something that will add up over time as you do this year after year and decade after decade, hopefully, as long as they keep offering the service. And that can really give you a boost in terms of being able to invest more money and feeling like what you're doing is the right thing, because you're going, hey, I put in $5,000 this year. And on top of that, they put in an extra $150. And so together, we're doing this thing. I'm investing, my service is with me. I just think it's a fantastic feature. The other things you get with Robinhood Gold, which is $5 a month, by the way, is that you get a 5.25% APY on your cash. And so right now, that's what the rate is. If you're watching this a year or two in the future, it's going to have changed. So just be aware of that. With any of these rates that I'm quoting, it's going to have changed. But right now, that's a really high rate. That is up there with the very best of the high yield savings accounts rates. As I just mentioned, you get a 3% IRA match, which is awesome. You also get bigger instant deposits with them, which isn't like a fantastic thing. I don't know who's trying to put in $50,000 immediately, but if you are, and if you love our Robinhood, then you can unlock that with Robinhood Gold. You get a little bit more access to investing research through Morningstar, which is like this other investing research company. So they give you more information about stocks and research you can do around them. And then you get real-time market data, which I'm not that into. I don't think a beginner needs to be into. So let's take all that information and put it into our framework here of these 6 things that it needs to do. Number 1, does it help us to profit more? Does it grow our money by investing wisely? Even though I just said all those positive things, this is still a net negative score for me with Robinhood because they still just gamify the act of trading so much that I think we're incentivized to trade. I think if I was going to day trade, I'd probably do it on Robinhood because it's just so darn fun. It makes you want to buy and sell things, and typically that lowers our returns over time. That helps us to lose more money instead of helping us to make more money. And so even though I love the fact that they've got that 3% match with Robinhood Gold to put it in your IRA, or even if you're not paying any money with them, getting a 1% match is a 1% boost. It's free money that's helping us make profits. Overall, I still think the design of the app, the way they've oriented everything to be, it's benefiting themselves by having you trade more often, not benefiting your bottom line. First step in the poop trophy direction. Number 2, is it easy, simple, and clear to use? Robinhood and Acorns are the 2 easiest investing services to use, period, bar none. I actually think Robinhood is even easier to use than Acorns. So that's a glaring 5-star review on number 2, is it easy to use? Number 3, do they offer fractional shares? Absolutely. Number 4, do they have multiple account types? Now they do. They got an IRA, so absolutely. There's not a ton of different account types. There's not a lot of consideration for your children here because I think they generally are marketed towards like young men, men in their 20s, but they do technically have more than one account type. That's a barely yes in my book. I would much rather them have a lot of different account types, a lot of different IRAs for us, and different offerings and a diverse swath of things to choose from. They got a couple things to choose from. So it's not great, but it's a technicality that it's a yes. They do offer automatic transfers, so you don't have to remember. You can just set it up to automatically invest more and more money for you, so that's good. And they do technically have high yield cash management. As of right now, if you're not paying that extra $5 per month for Robinhood Gold, you don't get that amazing, sexy 5% plus for your cash that you don't have invested. You're stuck with only 1.5%. So that is not as good as some of these other offerings. That's definitely not quite as high as it could be, but they've got to give you that carrot to go chase and pay the $5 a month. So I wouldn't say that's high yield cash management. I'd say that's sort of medium yield cash management. I wish that was higher. So technically that's also a no. It's not high yield unless you're paying $5 a month for it. So I guess in that case, you could argue that Acorns doesn't have that either because it's not free high yield cash management. It's behind a paywall. And the fact that if you want to unlock that high yield cash management requires a monthly fee from either Acorns or Robinhood also gets you a 3% match from Robinhood on their IRA deal, then it almost offsets that $5 per month fee that you're paying. And so in a way, Robinhood's a better value than Acorns. I don't think I can in good conscience recommend that Robinhood is the best investing app for beginners, but it's pretty darn great. If you think that you've got enough self-discipline to choose for yourself how you're going to invest, it could be really good for you. The main thing that I wish Robinhood did differently when it comes to beginners who are starting investing for the very first time is encourage them to not day trade, to not pick stocks, to not do all these kind of foolish things that most of us end up losing money doing. I wish they said, hey, how about we recommend these kind of tailored portfolios for you to say, oh, you're 25 and you're trying to save for your retirement. How about we put you in this group of ETFs? And you can see on their website and in their app that they have that as an option. They give you a recommended portfolio as a potential thing that you can pick from, and it is full of ETFs. So it's not that they're refraining from giving you that as an option, like they're forcing you to only pick silly things to invest in. That's not the case at all. It's just that I wish that it was more oriented towards that it funneled you into what was best for you instead of giving you kind of an equal option to say, either do this really unhealthy thing over here or do this really healthy thing. Either way, whatever you want, you do you, but we're going to incentivize the stock picking, if anything. In the end, a lot of the way these investing companies make money is by making money on every trade we make. So somebody like Robinhood can make trading really fun, thereby increasing their profits and increasing the money they make on the bottom line. It's an unfortunate reality of how these things work, but that's how a lot of these things work. So I'd say if you're positive that your self-control rivals that of the Andrew Hubermans of the world and the David Goggins of the world, and you're just ironclad in your commitment to invest in the right way for you, you won't get caught up in the temptation to do a bunch of silly investing, I'd say Robinhood is the best for you. For the rest of us humans that need a little bit more help and encouragement to guide rail ourselves so that we don't kind of fall off the wagon, I think something like Acorns or Wealthfront are better options. Next is Webull. Oh, Webull, another service that some people love to hate. So I'd say that Webull is similar to Robinhood in that they continue to offer better and better financial services and different products and things that help us. And that's been a big change from the past. So I'd say that they're slightly changing my opinion about them and making themselves better for investors because initially a few years ago, they were not. There's still a decent amount about the service that I don't really enjoy, especially for a beginner. I don't love that the service is annoying to navigate. I don't love that every possible view in the app or online or whatever is just cluttered with way too much data, too many numbers, too much going on. But they've also added some other things that are really great and help beginners. So the first in that line is that they've redesigned the app, and so it's a lot better looking than it's ever been before. So that's a big win for me, because if I don't want to use your service just because it's clunky and cluttered, then I'll just go elsewhere. So I have to like it enough to want to actually use it and like it enough that I think it's worth recommending. Right now, I'd say it's just barely crested over into the realm of I like it enough to where it's worth using. But for an absolute beginner, it's still really confusing. I mean, look at these views. It's like a lot of buttons, a lot of things that are specific verbiage. They want you to look at a bunch of charts and data and things, which I still don't think a beginner needs to use. But in terms of our checklist, they get almost everything right. So number one, do they help us to make profits? Do they grow our money by investing it wisely? They give us a lot of options to do that now. You can go ahead and pick their robo-investing advisor option. So it kind of interviews you. You pick out some qualities of what you want to do with your life and how risky you are or not, and it invests for you. They've got experts that you can pay to invest for you. You can just pick some ETFs and you can do that way. You can pick individual stocks. They give you a lot of options and they give you more ways to invest wisely than they used to. I'll put it that way. There used to be very few other options besides just stock picking with them, and I really didn't love them because of that. But nowadays, because they give you those other options, I think they're better than they've ever been. Do they help us make more profit because of that? I'd give them still a 0 on this. I'm kind of neutral because there's a lot of negatives and a lot of clutter, but then there's also some positives in that they're offering these services now. So yeah, it's a neutral for me. Is it easy, simple, and clear to use? It is easier, simpler, and clearer than ever, but it's still not easy, simple, and clear. It could be a lot better. They do offer fractional shares, which is great. They do offer multiple account types. They got an IRA that you can use, which is really great. They don't have anywhere near the number of account types that like a Vanguard has, and they aren't as easy to navigate even as Vanguard. And so technically it's a yes, but it's not an exuberant yes on multiple account types. They do offer automatic transfers, so that's really good. They make that part of your life easy. And they do have high yield cash management. The last time I checked, they've got 5% interest on cash at the moment, and it even gives you like a little daily update to say, hey, you have this much cash, you're earning this much every day. And so right now, while interest rates are high, it's a pretty darn good service in terms of optimizing everything. What that means is if I've got $1,000 in there and only 200 of it is invested, the other 800 is automatically earning that 5%. And so it makes sure that I'm earning as much money as I can all the time. That kind of brings us back to that number one. Does it help us make profit? Yeah, it does. And typically, like historically for most of my investing life, the whole high yield cash management thing hasn't been a big driving factor because interest rates were just so low. Like, what are you going to do with 1% extra interest? It's not a big deal. Right now, interest rates are so high that you do stand to benefit. And so there's a big delta between the services that offer that in terms of giving you high yield on your cash versus those that don't. So I think that's a big incentive towards something like Webull or Vanguard or somebody else who takes care of you in that way and gives you a good return on all of your money, whether it's invested or not. This is another one of those that doesn't quite deserve a poop trophy, but it's also just not great for beginners. They've got to continue to revise their design to where I can choose to opt in to all this data and nonsense if I want, or I can choose to turn it off if I want. I want that kind of customization. And I don't know why they think that we all need level 2 trading quotes and all this historical data and all these charts. And it's like, there are people who use that, but a lot of us don't. And so allow me to customize my view a little bit more to give me a simplified view. And then I could more easily recommend this as a best investing app for beginners. But as of today, it's not really there. The only other really appealing thing about Webull is that they have a lot of these good incentives to either start investing with them or roll over an IRA or something else that gives you like a big bonus. So if you haven't invested with them before and you catch it at the right time, you might get like 20 free stocks or free fractions of stocks. And those are worth between like $300 and $1,200 a piece. And so you get something like $60 or $100 or $200 to start investing with them. So there's interesting things like that they do in terms of marketing that incentivize us to go with them. For me, it's just the actual process of using the app long term that I don't love. And so I typically, if I get any free stocks, I just take the money out. But you do you. Next is M1 Finance. And historically, I have loved M1 Finance. Not because they're the best at any one particular thing, but because as a group all together as a whole, it's just a really great product offering. First off, in terms of helping us profit or grow our money, they do a pretty good job at that because they don't incentivize you to just cherry pick a stock here and there like Webull or Robinhood does. They incentivize you to develop a pie of investing. And for them, this whole pie nomenclature, this phrase is just to say you pick a bunch of different things to invest in and put it all together in one thing. And maybe you want to make your own pie, which is great, go ahead. Or they really incentivize you to check out their pre-existing pies. So they're saying like, hey, our experts have devised these pies. If you want this kind of outcome, like saving for retirement, or if you want dividend income or whatever, check out these pre-made pies and just use them. And so they've come up with this kind of like cheesy term for that. But what that's just saying is you should be diversifying. That's really what they're pushing us towards. And so for me, that's a big plus on the number one. Does it help us make profits? Because we need to be diversified to profit the most long term. Short term, no. A lot of you are out there going like, but Brendan, in 6 months, I made a 40% profit investing in whatever, Tesla, Bitcoin, something like that. That's possible in the short term. But over the course of 15, 25, 40 years, we're not going to make the most money doing that because those kind of things go up and down really quickly. We need stuff that in the long term goes up, up, and up. Is it easy, simple, and clear to use? Man, this is a disappointing factor for me. So I'm convinced it's gotten worse to use. M1 Finance used to be tremendously easy, but I think there's just been these little tweaks over the last 2 years that have made things more difficult to find. Like, why do I have to go hunting for a buy, sell, or withdraw option within this sort of oddball folder structure in my invest account? It's like, guys, why can't this be more obvious and more easy to see? I've got to click on this manage button. Why am I managing my account? Why can't I just have these actions in there? I don't know. That could be nitpicky, but I've even talked to other people and they're like, yeah, I think the app's gotten worse. It's gotten harder to use and harder to navigate over time. And so it's still probably just barely on the easy side. I don't know. I guess I can't in good conscience say that it's super easy to use for a beginner because it's just not. Like even I have to hunt around a little bit to find what I want. And so it's not super easy to use. It needs to be easier. They do offer fractional shares, which is really great. They're like the easiest in terms of fractional shares because they just expect you to have a bunch of different things in your portfolio and they're going to just slot those in there the way that you have allocated, like percentage-wise. So I want 3% of it to be this and 30% to be that. And so they make that really clear. They do offer multiple account types. I've got a couple different IRAs with them and taxable brokerage accounts. And so that makes it really easy to pick what you want to do. Again, not as diverse as Vanguard because they have like the most, but they've got enough that the average person can get all the account types they need all within M1 Finance. They do offer automatic transfers. They really want you to do that. And that helps us to, again, make more profit. The more we have invested, the more money we're going to make in theory. And so they do offer automatic transfers and they've got high yield cash management. If my research is correct, as of today, they offer 5% APY on their high yield savings. So they're up there with the best of them, and that's all without having to pay for M1 Plus. Big correction here because it turns out you don't get 5% without M1 Plus. One of the features of M1 Plus that I overlooked is that 5% cash interest that you get. So any uninvested cash that you have that you put in that account, that savings account with them, you get 5% on only if you're paying that basically $100 a year to get M1 Plus. Otherwise, you only get 1.5% interest. For me, that's really the only feature of M1 Plus that I love and need. And the fact is that I'm already paying for Acorns, so I could just move that money there. In fact, I already started doing that now. I've transferred all the cash that I had in M1 out of there because I'm going to cancel M1 Plus and save myself some money. Both Robinhood and Acorns can give me a very similar, if not better, interest rate for less money than M1 Plus. So why am I paying for that? I'm not anymore, canceling it. So even though that high yield cash management technically exists, it's behind that paywall and it doesn't have as many redemptive features that make it worthwhile as something like Robinhood and Acorns. And so that's just a barely yes for me. If anything, it should probably be changed to like a neutral score for that one. So M1 Plus is their like premium feature and it's $10 a month or $95 a year, or you get 6 months free if you refer a friend. And I feel like the features you get for M1 Plus are just not that appealing nowadays. So they say the features of M1 Plus are you get bigger cash rewards. So you you get somewhere between 2.5% and 10% cash back if you use their credit card. So they have their own credit card. If you spend money at these particular brands, you get some cash back. Okay, there's not enough brands there. It's not that useful. I need it to be like a universal 5% cash back, then I'm in. Then they say you get more investing tools. So you get multiple trading windows of time. They do this thing where whenever you're investing, they say, hey, you've given us this order to invest. You've got to wait until the next time period, which might be tomorrow, before we actually do that investing for you. I know that really like ticks some people off and they want it to feel more immediate. For me, this isn't a huge deal to have multiple trading windows in the day because like whether I invest now or 4 hours from now or 24 hours from now, it's not a huge difference because I'm investing for decades, not for days. So it's not a huge deal either way, but that means that this isn't a big feature ad for me either to have multiple trade windows. And then they give us lower loan rates. So what you can do with M1 Finance and others is you can do what's called borrowing on margin. And so let's say you have $100,000 invested with them. They're in various different investment accounts or in your taxable brokerage, let's say. M1 Finance will let you borrow against the money you have invested with them and like take out a loan on yourself. And so by being an M1 Plus member, you buy down that rate and so you can borrow money for cheaper. It's typically like, in my experience, I think it's been 2 or 3% cheaper than if you didn't pay for it, but it's still like not a cheap rate. I mean, it's not like it's a 3% rate nowadays in the days of 7 or 8, it doesn't lower it that much. So like right now, as of December 2023, the borrow rate is 7.25% with M1 Plus. To me, that's still an untenable rate. It's still too expensive. I don't love that. And apparently that's it. Like I'm just hunting their website for more features as we speak and going, okay, what else is it? Oh, M1 custodial accounts. That's another feature. Okay, a custodial account's not a bad thing, but why am I paying money to access one? That's kind of silly. And I'm hunting for more features and there's nothing here. Wow, I've literally, after I'm done making this video for you, I'm going to cancel my M1 Plus because this is not worth it. It's another big shakeup for this year, man. 2024 is such a big change in terms of investing accounts. Robinhood's gotten better. Webull's gotten better. Acorns has hung on. Wealthfront has become apparent that it's a pretty darn good option. And M1 Finance has gotten noticeably worse. It's worse to use for people. The features are worse. They haven't added anything new and exciting that makes me really want to recommend it to you or even use it that much myself. Yet I've got $100,000 with them. It might be time to make a move because they're fine, but they're not great. Now, do they have any huge critical flaws? Am I going to be giving them the poop trophy for this year? Probably not. I mean, they're not horrific. It's not something that I'm going to say, if you're using them, take all your money out right away because they're so bad or it's unsafe or something like that. I don't have those kind of red flags. Just if you're somebody who is starting as an investor this year or you're just getting started in the last 12 months, you want to make sure you made the right decision, M1 Finance is not the best. And now our final contender is one that you might not have predicted. Yotta. And the reason I bring them up is some people might be wondering why I'm not recommending other kinds of services like Yotta or Prize Pool, because right now interest rates are so darn high that a lot of us are holding more cash than we ever have in life because we can safely earn so much money. We can earn 5, 6, knocking on the door of 7% on our money. And that's not investing. That's just like savings account kind of vehicles, which are totally safe. They're FDIC insured. They're not going to go down in value. We can only go up. And so why risk investing this money right now? Just hold on to the cash and benefit that way. Well, my reason for this is just because savings account interest rates are high today, it doesn't mean they're going to remain high for forever or even for a very long time. So the wise thing for us to do overall, in my opinion, this is not investing advice, is just to plan on investing long term because that makes the most sense overall. Sure, in the short term, I love me some high yield rates. Like I love my checking accounts and savings accounts right now that are basically at 5%. I think those things are worth using. We should have our cash there right now. If you don't have your cash earning 5%, find somewhere to stick it to get at least 5%. You know, buy an 18-month CD or something. Get that optimized. But in my opinion, it's just a different purpose than the money we use for investing. We hold on to cash for short-term purposes and things that require cash. So like for us, we saved up cash for a down payment on our house, to buy new vehicles, to fix our roof, to have just sitting around in case we've got an emergency fund situation like, oh no, our water heater blew up. We need a new one. There's $1,200 gone or whatever a water heater costs. Those are the kind of reasons I think we should have cash. I don't think it's a long-term like investing wealth growing strategy to hold on to cash. It's just waiting to be deployed. And so I think it's important for us to have cash. Don't get me wrong there. I wouldn't invest that kind of money that we have set aside for that kind of stuff because there is real risk associated with investing in the stock market. And so I don't find it worthwhile to tolerate that kind of risk for this money that I need to have. Like I've got to have this cash ready to buy a new truck because I know it's going to happen in the next year. So I'm holding on to it. I'm not going to risk it because maybe I'll get a little bit more money in the stock market. That being said, of course, I'm tremendously optimistic personally about the future and that we should be investing like long term. We should be hopeful in that. We should be optimistic about what the United States and what the world is going to do together to grow economically. And at the same time, we can do that with some wisdom and restraint and, have cash and have money invested. Like, I'm talking to those of us who are really optimizers here. There was a time that we were like cash poor, sometimes had a hard time paying our bills, and it got kind of tricky with us cash flow wise because I invested so much. Like, we had no emergency fund, we had no cash laying around. I invested everything because I wanted to optimize and make as much as possible. That's a little bit silly too. We've got to have kind of a balance here. So a service like Yotta doesn't make the cut because it doesn't help me profit substantially long term. We're not talking about handling our money here for a year. We're talking about decades. A savings account will be crushed by a well-diversified stock market investment over the course of decades. But if all you want to know is what the best investing app for beginners is, I think this year it's a bit of a toss-up between Acorns, Wealthfront, and surprisingly, can't believe I'm saying this, Robinhood. Acorns is ultimately so simple to use. If you're intimidated by the world of finance and investing and the terms and the charts and all that stuff, Acorns is a really great option. I don't love that they make us pay a monthly fee, but what you get out of that is the easiest investing possible. Wealthfront offers basically everything that the other two do, just not quite in as easy of a package, and it gives you tons of features. But the fact that you have to pay that percentage instead of a flat fee like Acorns or an optional flat fee like Robinhood is a big turnoff for me with Wealthfront. If it didn't have that, if it just had a flat fee, or if you know for a fact that you're just going to get started with Wealthfront and then move it somewhere else once you get a substantial amount of money, I guess that can make sense. But for me, that fee ruins its chances of being the absolute best investing app for beginners. Finally, darn Robinhood, you've snuck in here despite my opposite of recommending you for the last few years. The fact that you get so much for so little in terms of not having to pay for anything, or if you do pay for Robinhood Gold, you get 3% back on your IRA contributions. So if you're somebody who's going to invest in an IRA, that basically should wipe out the cost of paying for Robinhood Gold every year. And so I think it's actually a really great option for beginners. It's, again, very simple like Acorns is. It doesn't quite direct you in as good of a direction as I wish it did. You've got to be careful in what you're investing in more with Robinhood. You've got to be disciplined. But man, what an interesting turn of events this year. There's a lot to investing and getting things set up and getting in the right mindset and understanding what is your goal in life. Like, with you and your life circumstances and your goals, how do you invest the best way? And how do you set up your life well to be able to invest well for the long term? How do you pick what you're going to invest in? How do you know what the best investing account type is for you? None of that has really been covered today in this video. We're just strictly talking about the best investing app for beginners. For me, that's a much, much simpler question. It's a tiny piece of this overall equation, which is how do you invest and what do you need to know to be able to invest wisely? If you want all that information that you need to get started investing and understand the kind of things like what do you invest in, what kind of accounts, what about taxes, all those other questions that everyone has when they get started investing, check out my online class. It's linked in the description right now. It's about 3.5 hours long, but you can skip around and get just the parts and pieces that you need. And really, it's your all-in-one, answer all your questions at the same time solution for you. Plus, I've got a little worksheet that you can write in as you take the class and you figure out what's right for you and your life so that you come away with this thing not just having taken some online class that you're going to forget. You actually have either a digital or a physical version of that worksheet so that you have all of your answers for your life that are tailored for you, so that you have that going forward for the rest of your life. The class is hosted on a platform called Udemy, and they often have some sales going on, so it's really, really cheap right now. I'll probably change that in the future, but if you want to take the class here for the next month or so, then go ahead and jump on it and get it for that really cheap price. I feel like they sell it for $20, so that's absurdly cheap. That's basically 90% off. Unfortunately for me, fortunately for you. The secret comment word for today, if you made it to the very end of the video and you enjoyed yourself, is trophy. I was going to say poo, but maybe we shouldn't be saying poo in the comments that much. Do what you want. You can say poo or trophy. If you enjoyed the video, you learned something new, you made it all the way to the end, then leave me a comment with poo or trophy, and I know you made it here. In the meantime, watch another video here, and I'll see you guys next time. Thank you so much for being here. I appreciate you, and happy investing. What do I do with my hands?